trading is becoming more and more popular. And that is for a good reason. More and more people are looking for a way to earn some extra money. And the best way to do that is actually online. There are many online businesses to start. But if you don't want high costs, customer support, bookkeeping, relying on clients, or depend on other people, trading is the best way to do this. And in this video, I'll teach you how trading actually works, what it actually is, and how to start trading and making money online with it. So what is trading actually? Trading is simply just buying and selling assets with the purpose to make profits. For example, you'll buy an asset like a stock, a crypto coin, a forex pair, or a commodity for, let's say, $100. And you think the price will go up, of course. When the price rises, you'll make money, and when the price lowers, you'll lose some. Besides that, you can also make money when shorting the market, or even when the market goes down. In this way, you first sell this stock and then buy it back later. Like for example, when you think the price of a boat is way too high at this moment. You make an arrangement with someone to sell a boat for like $1,000. Then after that, you'll go and find a boat which has a lower price. And when you find one and you buy it, then you instantly sell it to the person who you made the arrangement with. In the real world, this can be quite complicated. But when you are trading, you're all doing this on contracts which are called CFDs, contracts for difference, which makes it possible to go long and to go short without any hassle. But the next question is, of course, why does the market move? This is because traders are constantly buying and selling and always want to have the best price. And because of supply and demand, these prices can fluctuate over time. To explain this any further, let's say the company of Ferrari starts to build a new car. When this car is introduced and the first ones are getting on the market, prices will go through the roof. Because everybody wants to have the newest Ferrari, but there are only like 10 or maybe 100 made of. In this case, the demand is very high and the supply is very low, which increases prices over time. But let's say when Ferrari keeps producing more and more cars, prices will eventually go down because demand will probably get a little bit lower and the supply is increasing day by day. But eventually there comes a point when Ferrari says, we are going to stop with producing this type of car. In that time, the supply of new Ferraris will stop. And because cars break down after like 10, 20, maybe 30 years, the supply will get lower over time. And because of that, this becomes more of a collector's item. And probably demand will increase as well, which of course in that case will increase prices over time. These are the basic principles of supply and demand, which drives the markets actually. But then the next question is, of course, how do you decide to buy or to sell? What most traders do is just jump into the markets based on their feelings, emotions, and stuff they heard online. And obviously this doesn't work. Because if you want consistent profits with trading, you need to have a consistent approach. And the only way to get a consistent approach is by having a solid trading strategy. Having a solid trading strategy is the only way to become constantly profitable over time with trading. By the way, if you think this video is already valuable, please subscribe to the channel because over time we have a lot of new videos explaining everything about trading, how to become a trader, how to get profitable, and how even become a funded trader. And if you subscribe, you will never miss a new video, of course. But let's move on. What is a trading strategy actually? A trading strategy is simply just a set of rules which indicate if you have to buy or to sell or do actually nothing in the market. This is based on certain price patterns in the market, which we also call technical analysis. And that's why you always see traders sitting behind the desk looking at the charts, because they are looking for price patterns in the market to see if it is interesting to buy or to sell. And when they bought or sold an asset, it is also important to set a stop loss and a take profit, which is actually an automatic order to say, like, when this price will be hit, I want to close the trade. And a stop loss is, of course, to minimize your losses. And a take profit is to take your profits, actually. It's very simple. And if you want to know how to create a trading strategy, please click on this video, because in this video, we will explain how to do this and how to become a profitable trader. But when you created a trading strategy, the next question, of course, is how do I know if the strategy is actually profitable. Because, for example, when you have a trading strategy and you don't know if it is profitable or not, it could be that you have a losing strategy. And if you play out a losing strategy over time, eventually you will always lose. There is no possibility that you can have profits over the long run when you're trading with a losing strategy. Some people say, I just trade it and then I build confidence in it when I have the time. And the solution to this is actually backtesting. And backtesting is actually executing your trading strategy over the past 5, 10 or 15 years to see if it would have been profitable over the long run. What you do is you look back on the charts, you find all the trades you should have taken, then combine them all together and see if it would have made a profit over the long run or if you have made a loss over the long run. Besides that, in the near future, we will create a video about backtesting. So if you want to see this one, also please subscribe to the channel because there will be many more videos about trading. All right, so you have backtested your trading strategy. And now you know it is profitable. The next step is to actually start trading yourself. And where you do that is with a broker, which is actually a bank account which you can open to be connected to the market. A broker is simply just a financial institution who creates the possibility to trade on the market. It's like a bank account used for trading. What you do is you create an account, choose a trading platform, deposit your first money, and then you could trade through the platform you chose. And the most popular trading platform is MetaTrader, and this is the actual platform where you place the trades. MetaTrader is simply just an independent software which you can use to buy and sell in the markets and which is connected to your broker. Also, if you want to know more about MetaTrader or any other subject we covered, please let us know in the comments so we can make videos about that. So now you know the basics of becoming a trader, and I can keep on hours and hours and hours explaining a lot more about this. But if you really want to learn how to trade and you want to learn how to become a profitable trader or sometimes even an automated trader, make sure to join our school community. Because in the no-code trading community, we will teach you anything you need to know about trading. We will also teach you how to automate your trading so that you don't have to look at the charts all the time. You don't have to stress about your trades and everything is done on autopilot. I promise. When you join the school, you'll get many more valuable insights on how to trade the markets, how to become a profitable trader, how to become a funded trader, and how to become an automated trader. You'll avoid all the pitfalls most traders make, and this will be the most efficient way to become a trader. And yes, joining the school costs you nothing. It's completely free, so you'll actually have nothing to lose. So join the school with the link in the description, and I'll see you there.